What's up, everybody? It's Stocks4Rell. I told y'all I had one for the whales. Let's get into it. What's up, everybody? It's Stocks4Rell. I'm back. We just put out a play for the minnows, right? And I ran it up, a call option up 58%. I ran puts down 18%. And I know a couple of y'all hit the home run, hitting 100% on the play. So shout out to y'all. But if you had contracts for this week, you probably got shook out a couple of times just because of that swing from 28.12 above and below 28.12. So hopefully you guys are doing okay. Hopefully y'all were able to eat. And if you weren't and you took an L on it, hopefully you didn't bet more than you were willing to lose, okay? That being said, I put out something for the minnows. Today, I'm putting out something for the orcas, the whales, the sharks, all right? And I'll let you guys know this. I am not a shark. I am not a whale. I am still a student of the game. I am learning just like many of you. And I'm 100% transparent in my journey, okay? I have not made it in this market yet. I'm very, very smart, but I'm still working on the discipline side of things, okay? This is options trades with Rell, okay? So what I do, I put out option plays for 3 different account sizes. You got the minnows, you got the dolphins, and you got the orcas or the whales, okay? Minnows, you will range anywhere between $20 and $50 for an options contract. Dolphins, $50 to $200, and whales, $200+, okay? So that doesn't necessarily mean that a minnow can't play a whale play and a whale can't play a minnow play, okay? Remember, I'm not a whale, not often as far as how I'm playing this market. So the one I'm bringing to you today, I'll let you know, but you can buy a contract for $2,000. With this play I'm about to tell you about, okay? Or you can buy a contract for $16. So there's a wide range, but when you're looking at a range that varies that much, you're needing a big move if you're on the lower end of it for you to make it make sense, for you to make some money, okay? That being said, before I get started, this is not a suggestion for you to buy, hold, or sell. Anything that I say is just my opinion, and I'm using real world examples of plays that you can personally get into if you so choose, okay? You should do whatever is best for you, your portfolio, and your financial situation, okay? That being said, first on the list, first on the hook is Netflix. Netflix earnings is coming up July 18th after hours, okay? I've played Netflix multiple times, and the only time I play Netflix is when I'm pretty confident in the play. This is the first exception of that rule. And I will show you screenshots of my various wins on Netflix, because when I play Netflix, I win big, typically, or historically, okay? But this time around, there's a little bit of uncertainty. Netflix has been on an absolute rocket, and there's been a lot of things going on with the company, and we're not yet sure when some of those changes and events that's happened is going to actually show within their numbers. A lot of the movement from Netflix has been because of the moves that they've made, but not based on the results of what those moves had entailed, because we don't have that data yet, okay? But I'm going to get into it. So Netflix earnings is estimated for July 18th after hours, okay? The revenue estimated is $9.53 billion. Now, is this a bullish moment for Netflix or a bearish moment for Netflix? And that's what we're going to get into. But I'm going to cover a couple things. The analyst right now has Netflix on average of $700. Okay, right now we're sitting at $655, so we're below the average, but we're above the minimum of $545 and below the maximum of $800. Okay, so that being said, the bullish case right now, the bulls say Netflix has expanded its sports and event content, which should boost engagement across its large global subscriber base and attract more dollars. right? This is the reason why I was interested in Netflix, because one, I'm a big wrestling fan. Like, I just went to WrestleMania, had great seats, had an amazing time, best experience I've ever had. If you haven't been, go. But Netflix just partnered up with TKO, who is the parent company of WWE and UFC. Okay, Netflix paid $5 billion in order to stream WWE Raw. Okay, that doesn't start, I don't think, until August of this year. I have to double check, but that money, that revenue has not yet started to generate. So right now, that's an expense instead of, until it starts to become an actual thing on the platform. The bears say Netflix advertising platform is still lagging behind in other connected TV offering, despite being launched almost a year ago. Bull case: subscriber growth, meeting or beating EPS or revenue, content strength, and news of strong viewership, acquisitions, sports expansion, and increase in subscription and game expansion. So those are the bull cases essentially for Netflix. If all those things are doing great. So on the bear case, something that will drag the stock down is slowing subscription growth, competition like Disney and HBO Max, viewership of original content, and then pressure crackdown on password sharing. Okay. That being said, a couple of bullish things right now. Revenue, the website traffic for Netflix is up 90%. Okay. And the TKO acquisition or partnership, I am interested in this. Netflix has been trying to grow internationally, and I think this is huge because WWE is a global brand. So I believe once that was announced and people are aware that Raw will be streamed on Netflix, I think that in itself had boosted subscribers, even prematurely before the streaming has actually occurred. So I'm kind of banking on that, and that's why I'm more bullish than bearish. So let's get into the technicals, okay? Let's look at the charts. So I'm back, different shirt, different day. We hit 600% on silver, but y'all already know that. So into the technicals on Netflix. Now, on the 1 hour chart, you guys probably noticed that we were in an ascending wedge, but it also looked or could have been identified as a double bottom, but there was a false breakout on that double bottom, and instead it pulled down and broke under the wedge or through the wedge, and then it just dropped. Now, what you're seeing right now is it's forming a descending wedge, which anybody that knows me knows that we've been looking at descending wedge patterns, and a lot of times they work out, but sometimes they don't, right? I'm expecting this descending wedge pattern to complete tomorrow by the bottom, okay? So I'm looking to pick up calls around the 638.87 area. So with that pattern, but then you also see a supply zone. So there's a wall there between 657 and 654. It needs to break above that in order to actually be considered truly bullish. But on this way up, you do see three white soldiers, which is three strong, solid green candles. That is an indication of a potential reversal. So right now, it's a mixed bag with Netflix. It could go either way, and essentially, it like any play or any earnings call, it depends on what they report. So that's why you got to be careful with how you play this. All right. Hey everybody. So there's actually like 6 more minutes to this video, but I'm not going to do that. It's gotten a little bit too complicated. So here's the thing. I had the plays and stuff kind of laid out. However, something changed today, and I talked to you guys about this before, and I talk about it in my options trading tips playlist. If you haven't checked that out, go check it out on my page. But implied volatility. Essentially, what's happening is today, despite Netflix pulling back, like the contract that I was looking at for calls originally was $76. Then they dropped down to $54. However, the implied volatility for the contracts have gone up to about 140%. And when that happens, that means that more interest is generated of the stock and of the options, right? Which in turns increases the premium for the contract. So I'm not willing to pay that much more for the contract with so little time for expiration, because essentially what happens is that the implied volatility goes up before earnings. So 140%. Tomorrow it could be 167%. I don't know. And then once earnings reports, it falls like a rock. Like, so the implied volatility typically just gets decimated. So traditionally, when that happens, it doesn't matter if you're in call or puts. Typically, you're probably getting smoked. Okay. So the reason why I'm saying this and not showing you a contract now at this point, because I had them all laid out, is because I don't know what the end of tomorrow looks like. So this is where you, as a trader, you would have to put your thinking cap on and understand how these options contracts work. That's why I say this is a well play and not necessarily a minnows play, because it requires another level of thinking when it comes to choosing the right options for you. Originally, 2 days ago, the $800 call option and the $550 put option made sense to me. Why? Because the implied volatility, I believe, was 100%. It's either 76% to 111%. Now, those are manageable, right? And I had estimated that that call option, that 800 strike call option that expires on the 19th, would be worth $16 once it reached a 638.87 price point that was my target for entry. Now that contract, likely, if we hold this implied volatility of 140% or more, that's likely to be $40 for that contract. Now, it doesn't sound like much. However, what that means is come Friday morning, after earnings had already gone through and opening bell hits, that contract will probably be worthless, because all the information that anybody that was interested in the play is out there. So there's no interest anymore. So I would be looking at 1 week out for expiration, because those the implied volatility for those are around 74% at the moment. Okay, so you got to do your own research, guys. Netflix moves very aggressively, so there is money to be made on this play, but you have to pick the contract and the premiums and whatnot that works best for you. I am not going to give you what that is for me right now. Now, if you follow me on IG, and if I decide to play this, I will post on IG, and I also will post in the Discord the contract and play that I'm in for as long as I have time, which I should. It shouldn't be a big deal. But when I post that, that's my entry. So you can be on the lookout, but you don't want to FOMO into a position either, okay? Because you'll get smoked. All right. So trade carefully. Netflix is a banger. Here's all of the gains that I made over Netflix. I've never lost in Netflix. Not a single one have I lost in Netflix. And every one of them has been bangers. But this is my only one that I'm kind of skeptical about. So tread carefully. That's the only thing I can say to you. Again, there's so much more information that needs to be considered before even jumping into this play. That's why it's a whale play and not a minnow play. This is Stocks4Rell. Please hit that like and subscribe. Take care.